Welcome Accounting Boffins, you with Ashraf Patel and the team, and we're continuing with periodic inventory and inventory systems, and we're also looking at ideas as to how we can solve problems or challenges that businesses may experience. Expect this type of questions in the exams as well. Okay, so here goes. If we look at this question, before we go into the question, let's look at the summary once again. What do we know about inventory systems? One, when you're dealing with perpetual inventory, the most important thing to remember is you're keeping a continuous record of stock. In other words, you have a cost of sales account. Keep that in mind as an important feature of the perpetual inventory system. Right, when you're looking at periodic inventory, what do we know? We know that we do not keep a cost of sales, right? And also, what is important for you to realize is that each of these systems has their advantages and the disadvantages, which we've discussed in previous lessons. So go through them again, make sure you are familiar with them and you understand them. Very, very important. Okay, so now if we look at our question, it says here, required, identify a problem in each branch, quote figures, and offer solutions, right? So this is a data response type of question where you are given the data, you are expected to analyze and find the problems, and then obviously offer solutions and make necessary suggestions. So here we go. This is the information that we have regarding our three branches, one at Queens, one at Kofivamba, and one at Solo. Okay, so now the question says here, let's look at the first at Queens branch. We have to identify, looking at this branch here, looking at the information that we have, and see what do we find as a problem. Okay, so if that is the Queens branch, let's go into the answer. The first problem that you identify is missing stock. Now, let's look at that. If your stock balance is 230, and if you sold 180, right? Let's do that. If your stock balance is 230, and you sold 180 units, meaning you're supposed to have 50 units on hand. Clearly, you can see that that is not the case because your stock balance is only 35. Therefore, it tells you that there are units that are missing. So clearly you can see that when you're analyzing a question of this nature, look at the information that is provided to you. So we looked at it, and in terms of the stock, we found that in this particular branch, there were 15 units of stock missing. Right. Once we've identified the problem, we now have to offer a solution to the problem. What is the solution? Number one, we need more effective stock control. In other words, the business needs to ensure that there is stock control. Number two, check against stock records. In other words, check if these are the number of units that I've bought, these are the units that I've sold, clearly the two should match, and therefore, if they are not matching, definitely we have a challenge in that business. Set up security, very important. Now, when we're looking at security, make sure that the security that you are setting up is effective. In other words, take your items, maybe put a code on it or a sticker which beeps if it moves out without it going through the till system, or there's many other security measures that you could put into place. So what we have to do is we have to set up some kind of security. Okay, the next branch that we're looking at is your Kofivamba branch, and here we have to once again look at the information and see what can we identify as a challenge. Now, just to give you an idea, if you look at the stock, you had 160, you sold 40, you got 120. Clearly you can see that is not a challenge in that store. So where is my challenge? My challenge is, if I look at this store here, clearly I can see that relative to my other stores, look at this here. you can clearly see here that, let's just go back here, and, oh, we're still busy with the Queens branch. We'll come back to the other branch. Let's carry on with Queens. If we look at Queens, another problem that we have identified here is your advertising. Again, look at your advertising relative to the other branches. Okay, so we only spent 1,400 on advertising, whereas the other branches are spending 6,720 and 6,120. So clearly you can see that we have low advertising, which is only 0.7% of your sales. So if you have low advertising, how do you remedy the situation? Very simple. We will remedy the situation by budgeting more for advertising and to assess if it increases your sales. In other words, increase your budget for advertising, and when you increase your budget for advertising, you must also assess that if I've increased the advertising, is it having an impact on my sales? Because clearly you have to advertise, right? As we often say, you can't wink at somebody in the dark because surely they can't see you. So therefore, if the lights are on, they will be able to see you. We have to advertise our wares. Okay. The next branch we're looking at now, obviously, is the Kofivamba branch, and this is where our emphasis is now. And if we look at this one here, let's look at the first challenge that we have here. If you look at your sales, right, 44,800. Once again, compare it to other branches. Looking at Queens, it's 201,600, and if you're looking at Solo, it's 81,760. So clearly, we can clearly see we have identified as our problem our low sales volume. In other words, how many units did we sell? Look at the information. Number of units sold. Clearly, you can see it stands out. If relative to Queens and Solo, it stands out. So clearly you can see you've only sold 40 units of the total 160 units in stock. So your low sales volume. Right, then what's the solution to the problem? How do we solve the problem? Very simple. We pay the salesperson a commission to improve sales. In other words, you don't give a fixed salary because to motivate the person, you have to base their salary or link it to your sales. So if the sales increases, the person would obviously earn more, and that would be an encouraging factor to improve our sales. Right? Remember, we're still busy with the Kofivamba branch. We're holding too much of stock. Let's look at it. Here's my stock balance. Clearly, you can see you have 120 units on hand. Now, obviously, that is directly related to your sales. The fact that you're not selling enough means you have too much of stock on hand, and surely that in itself poses other challenges. The moment you have too much of stock, it can become obsolete. You're also then opening yourself up to possible pilferage and theft if you're holding too much of stock. Right? How would we solve the problem? What we would do, we can transfer this stock to the Solo branch. That means move it to another branch where obviously there's a need for the products. Okay, the next one that we're looking at now is your Solo branch. We've identified Kofivamba. We said high advertising cost, and oh, this is still the Kofivamba branch. Let's go back and see what we identified here. We have advertising of 6,720. Remember, that's the branch that we're looking at, okay? And we can see that although there is high advertising, 6,720, it's not yielding the results. Clearly, you can see that. So it means that there's something wrong with your advertising campaign as far as this branch is concerned. And obviously the salary. We mentioned earlier that in this particular one, the salary of the person obviously is higher than the queen's, but yet we're not getting the desired results in terms of our sales. So this means, therefore, monitor your advertising to ensure that there is no abuse, right? It's possible that the advertising campaign is probably given to somebody who's au fait with the salesperson, and there may be abuse of the advertising budget. It needs to be investigated. Also, extend your market. Look at where your market, you can extend your market to. In other words, look at the current situation where you are situated and then ask yourself, is it possible for me to extend into another market in order to increase my sales? Remember, what do we want to do? We want to increase our sales. Monitor and manage the salesperson. Obviously, set better sales targets. This means, therefore, that you have to now monitor your salesperson, because clearly, because of the high salary, you're noticing that there is not enough units being sold. So clearly, you need to put strategies in place where you monitor the salesperson, and also you then set targets for the sales team. Okay, I think we're moving on to the next branch now, and that's the solo branch. And okay, clearly you can see you had stock of 85 and you sold 85. You've got no stock on hand at the end of the year. Meaning, clearly you can see, as far as the solo branch is concerned, one of the problems that we've identified is that there's no stock to meet demand. Clearly evident from our information. What can we see here? We can see that we have 85 units on hand, right? And we sold 85 units. So this therefore means that clearly, if you had more stock, it would have been possible to increase your sales. Therefore, this is a serious problem for this branch here. Clearly, you can see your stock is running out. You have a nil balance at the end of the month. Here, once again, you can see that 85 minus 85 is 0. Is there another challenge in that branch? Let's go and check it out. If you look at your deposit here, you have a deposit of 81,760, right? And if we look at the figures, let's take out our calculators here and say, okay, if we take this into account here, we had sold 85 units. So that's 85 times 1,120 will give you a figure of 95,200. Okay, watch that again. I said we sold 85 units, as we can see here, and the selling price per radio was 1,120, meaning if I multiply the units by the number that I sold, I should deposit an amount of 95,200. Okay, now let's look at what I deposited. I only deposited 81,760. Clearly you can see that the deposit is short of 13,440. So again, you got to study the information and look at number of units that I sold, what I sold it for, and the amount that I should deposit. Clearly you can see here that the deposit of my sales revenue is short. Like we said, if we looked at our calculator, the figure was 95,200, and if you take your 95,200 minus the 81,760, you're going to see you're short of 13,440. Again, watch this here. There's my shortage, 13,440. As a result, clearly you can see there's a challenge as far as the cash is concerned. Okay, now, where there's a problem, we need to solve the problem. Number one, transfer more stock to this branch here. Clearly, this was as a result of us not having enough stock on hand to meet the demands of that particular branch. Definitely, we need to transfer more stock into that branch. Okay. As far as the other challenge is concerned, right? Clearly, the manager is not doing what he or she is supposed to do, right? Because this means there's money being stolen, right, from this branch. And that is definitely unacceptable in terms of the operations of that branch. The manager is responsible for that branch, and the manager needs to account for the money that is being stolen. Also, monitor deposits, request notification from bank. In other words, remember, accounting is about control. So definitely, in terms of internal control, and we do know what we mean by internal control, the purpose of internal control is to safeguard the assets of a business. And clearly, our asset here, bank, is not being safeguarded. Clearly, you can see the challenge is the amount of monies that we are receiving is not the amount of monies that are being deposited into our bank account. Okay, guys, so we also said, remember, monitor our deposits, request notification from the bank as soon as a deposit takes place. And then obviously review the division of duties. In other words, remember what we said. Part of internal control is to ensure that we have division of duties. What do we mean by that? By that we mean one person serves as a check on another. In that way, you can clearly identify where our challenges are. Okay, guys, that's it for this segment. We'll take a quick break and we'll see you in a jiffy.